Starting. All attendees are in listen-only mode.
Good morning, everyone. This is Mark Rainmakers with Insurance Agency Marketing Services. Thank you for taking time to join us here this morning. We have our guest speaker here from Mutual Trust Life, Kip Walker, soon to be the Regional Vice President. So congratulations to you on that, Kip. And
Thank you, Mark.
yeah, absolutely. This webinar this morning is recorded, so we'll give you a chance to review it, to go through some of the concepts, and they've got a new product that Kip's going to tell us about. So really some good stuff. We've done some infinite banking with them, or however you want to call it, bank on yourself. There's a lot of different terms out there. We got to be careful what we say and use, because there are some copyrighted terminology there, but certainly a great product, a great carrier to do that with. And so we're going to have this recorded for you. We'll email this out. Should be by the end of the day. If not, it'll be sometime tomorrow, and then we'll follow up with a phone call and give you a chance to ask any questions and or maybe to provide some cases you want us to illustrate for you. A few things we're going to do here real quick this morning is we're going to go through some things that we can make, that we do make available to our producers and advisors. And there'll be a couple of polls as well. And speaking of that, we're going to go ahead and do one right quick here, and then we're going to go ahead and move on. So your participation is greatly appreciated here. So I'm going to put up a real quick poll here. And this poll is on a training event that we have. And so just real quickly, mark yes or no. We obviously, you notice that we're real big on training. And so what we do is we provide a 2.5-day all expense paid training. What that means is we pay for your airfare, your meals, and your lodging. So we cover all that. And we have speakers and presenters that come from across the country to share sales concepts. This is not a product type of training. Everybody's got product, but what we want to do is we want to show you different concepts. And of course, there would be products that would work best for that. So we fly in on a Wednesday. We do some short presentations that first evening with dinner. Then on Thursday, full day, and then a half a day on Friday, we get you back home on a plane by 1:30, something like that. So depending on where you're heading to. But this is a great way for you to grow your annuity business and or your life business. We have a lot of advisors that come in and they want to offer more life insurance. And with the DOL ruling that's coming in, obviously we'll talk about that. We'll talk about some things that can help you to prepare yourself for that. Of course, that may be a little bit different look to it now with a different administration going into 2017, but nonetheless, we all need to be prepared for whatever comes our way in that respect. So we're going to talk about a lot of different things in this academy, from marketing strategies. We do some breakout sessions where you're going to learn different marketing strategies, different concepts. And so obviously this is a great way for you to grow your business. And then I don't know if I'm not driving the message home here, but there's a lot of people that are not voting. And we have 3 to 4 of these a year, and we're done having them for 2016. What we're going to do for 2017, we're going to have 3 of them scheduled. We will let you know when they're going to be. So by marking yes, what we'll do is we'll put you on the list and we will email you the dates that are coming up. You can select a date that works best for you. We'll then have you complete an application, and then we'll see which one of these is going to be best suited for you. And so again, this is our all expense paid life and annuity training academy. And I'm going to go ahead and close this poll out here so we can move on. So if you're interested, just mark yes. It doesn't necessarily mean you have to go. You're just interested in potentially attending and knowing more. So we'll certainly get something out to you here once we know the dates. And of course, we'll have the topics and the agenda out there for you as well. Okay, so in the essence of time, I'm going to go ahead and move on. If you decide that you want to attend the event and you have not voted or weighed in, please go ahead and maybe type in Academy in the question box, and then we'll be sure to get you the invitation as well as the agenda itself. Okay, so I don't know if you are currently taking advantage of marketing yourself at all or branding yourself, but one thing that we've seen is that when agents get contracted with us and they start a campaign of some kind where they're going to be out, maybe it's just something as simple as social media or getting a logo or branding yourself, we can do that for you. You can certainly buy into it, or you can earn it based on production. And anywhere from your basic logo letterhead all the way to television commercials or advertisements, we can help you with that. Matt Neal in our office, if you want to know more, you want to visit with him about that, he's the one that you want to talk to. He is not the one hosting the video this morning. There's some confusion, and he gets a lot of my calls, but this is Mark Raymakers, and Matt's the one that sets up our webinars here. So anyhow, keep in mind, give him a call, and he'll get you up and running, including setting up your own website, which that brings us to our new producer bonus. I'll tell you a little bit about that real quick. So we've got 3 different tiers, and if you look at each one of those tiers, those are dollar for dollar for single premium life or for annuities. Now on traditional life, we base it on target premium. Now that's not 100,000 in target premium. It's actually substantially less than that. But so what you can do is when you write your first piece of business, or if you have any questions on how that pertains to traditional life, please call the marketing department, Life Marketing, and they'll tell you how that works. But in the first level, if you get 100,000 level, you have an option between $750 cash bonus or a 2-year subscription to a website newsletter. Now, if you have not set up a website, I can't encourage you enough to do that. Consumers today are smart, and they're going to check you out. And if they're not finding anything out there on the web, they might go to your competitor that's a little bit more established, a little bit more savvy. So keep that in mind. They're pretty simple to do. Matt can have your website up and running in one day if you wanted to just purchase a program or if you want to earn that, of course. Then there's the iPad. A lot of companies are moving towards the iPad app. You can't mess those up. You don't have to worry about carrying forms just to find out they're outdated when you get to the client's home. So those are 3 different options there. There's the 300,000 level if you want to wait to that point. You could get the full Social Security program and 3,000-piece postcard mailing. That has just been tremendously successful, those that invest their time in it. You have to learn about Social Security. It's a seminar type approach. But the nice thing is you sit in front of a lot of seniors that are about to retire, and you can help them with their whole portfolio, and that's really what it's about. It's not, you're not making any money talking about Social Security. It's getting in front of them and helping them to plan their retirement most effectively and efficiently. You can earn that or buy that, of course. Then there's a $2,000 matching marketing money to promote your business or a $1,500 gift card. The last option is the 500,000 level. If you let your points accumulate to that point, you can either take advantage of the 5,000-piece mailing and seminar coaching with Matt Gill or 4,000-piece mailing and seminar coaching with Dave Pimper. Now, both of these agents will be at the Training Academy next year, and you'll see their approach. You'll have a chance to visit with them one-on-one. Of course, you can earn those or buy those. Finally, there's a Ritz-Carlton Travel Rewards. You can make your own personal getaway if you like. I see that a bunch of you are joining us here this morning. I'm just finishing up here on a few of the intro slides on what we can do for producers that get licensed with us here. And then we'll go ahead and we'll move on to the heart of the webinar this morning. One last thing, a referred producer program. So let's say that you've got a friend in the business that maybe isn't getting the service they want, or they just feel like they're not reaching their potential. And working with us, we can certainly help agents with that by providing new sales concepts, new products, back office support. We're going to manage all of your life and annuity cases for you, allowing you time to do what you do best, which is obviously selling. So by referring someone over to us, what we're going to do is we're going to send you a check for $50 when your referral contracts. All we need is their name and their phone number, and a warm introduction is certainly nice so that when we call, they're expecting us. And you'd be surprised, we pay out thousands of dollars in this program every year. So just for getting contracted, you get a check for $50. Every time they write business, you're going to get an override or 20% basis point on whatever they write. So if it's like annuities, for example, or single premium life or traditional life, they all add into this. So if you get 3 $1 million producers, for example, that's $6,000 in cash for you, and we'll continue to pay that to you every quarter for as long as that producer is producing. So it's a real neat program. We have agents that are exceeding $13,000, $15,000 a year in the referrals. It doesn't affect their commission. It doesn't affect yours. It's just basically our way of saying thank you for the referral. One last thing is the marketing reimbursement. And this is something I think is very important. I wish as an agent I had such an advantage of this. But what we do is every time you write a piece of business, so let's say, for example, you write an annuity for $100,000 or single premium for $100,000 or a target life case for, I believe it's $25,000 now, we're going to put $200 into a marketing reimbursement account for you. And so what that means to you is that, let's say at, well, Christmas is coming up, okay? So let's say that you want to have a customer appreciation over the holidays. And let's say you spend $5,000. You can send us a receipt for the $5,000. We will turn around and send you a check for $2,500. Whatever you have in your account, we're going to reimburse up to 50% of what your expense is. So what does that do for your revenue? Your expenses are getting under control. We're helping you with that. You're putting more money back in your pocket. It's really a no-brainer. A lot of our agents, what they do is, as they do a seminar every month, they send us the receipt, and their seminar costs are cut in half. Or if you're buying leads from somebody, a lot of you out there might be buying leads from a company, and you're taking a hit in your commission every single month. We don't do that. What we do is we pay you the full top-level commission, and then we will reimburse you for the leads that you purchase. So certainly something to keep in mind, to think about as you move forward. Obviously, if you want to be appointed with us, it's a simple paperless contracting process. And you can certainly call me or anyone in marketing. We can get you over that form. And then once you complete that, you'll never have to complete contracts again. What we do is we just add more carriers if you need them, to move forward in your business. So, all right, I'm going to go ahead and turn this over to Kip. Kip, thank you so much for taking time today. I know you're busy. I know you're traveling and you're working with a lot of different advisors across the country. So certainly appreciate you taking time with us here this morning.
Well, thank you very much, Mark. I really appreciate the opportunity to speak with you guys again, and we got a lot to share. So whenever you're ready, I'll take off.
You go right ahead. I'm done.
Okay. All right. Well, that's easy. So last week we talked about the horizon value. If any of you were on the call or not on the call last week, and what I wanted to do is we have a new presentation on the infinite banking concept geared towards business owners. So I wanted to share that with you briefly, and then go into, and we are working to try to get this approved for client use, but for now it's just for your information. But I do want to also hit again on the horizon value, show you how much more effective the infinite banking concept is with mutual trust, even more so than it was before the new horizon value product. And the reason why we are so strong in infinite banking is our high early cash values, and infinite banking really relies on that kind of high cash value and early access, unparalleled. We're unparalleled in that regard. So now with our new product, it's even better. So we're going to take a look at this new infinite banking concept presentation, really looking at it from the business owner perspective. So when you're talking to business owners and you're asking them questions, one of them might be, if you thought something was true and it wasn't, when would you want to know about it? Okay, it's a good question. We all have misconceptions out there about ways to do things, and you know, that common knowledge that many times will just get you common results. There are other ideas out there that have been really focused more in the higher net worth area that really work well for the mass affluent. So when you're in your business, when you're working every day to build your business, are you looking for more opportunities? Where is your opportunity money? What if an investment comes along and you have an opportunity to make a good rate of return on that? Do you have capital to take advantage of that? If I have an opportunity to double my money with an investment, I don't have the investment to make, then I'm not going to be able to capitalize on that opportunity. So really what we want to do is we want to set ourselves up to take advantage of those opportunities. And there's different ways to do that. And we're going to talk about a couple of them and then talk about what we feel is the best way to do that. Capital is really the lifeblood of a business, and there's some businesses will be able to draw on their own cash from their savings and from their business if they're lucky. But many of them will look to lines of credit. They'll look at lines of credit or liens on their home or what have you, and this can really put the business in a difficult situation. They may be forced to accept unfavorable terms. The bank can call their notes at any time, and this can result in opportunities that are lost that could have been very lucrative. and ultimately it could jeopardize the very existence of their business. So what do we need to find? We need to find some way to build up a pool of capital that has liquidity, access, and control. Now, there are different sources of capital, and those can include lines of credit, which we just talked about, which can be called, and the terms can be very, very onerous, put you at the mercy of the financial institution to change terms and interest rates and what have you. Then you have real estate, which is just not liquid enough. If you have money tied up in real estate and you need to access that money, well, if you do want to access the equity in a piece of real estate, you still have to go to that financial institution. And if we suffer another downturn in the real estate market like we did in 2007, 2008, that could again lead to a situation where you don't have access to the capital when you need it. That leaves us with really bank accounts, CDs, money markets, the kinds of accounts that are extremely liquid and very safe. So that's what a lot of businesses will do if they're building their own source of capital. And what you want to do is generally hold this outside of the business, and the capital is owned by the business owner, and then the business owner makes loans to the business, and then the business pays principal and interest back to the owner. Now, there's some tax advantages to this that I can't get into, but be happy to discuss this with you or get you in touch with Richard Weiserick, who is our business planning guru. But this is generally the best way for small business owners to handle this pool of capital. Now, we already said that investment accounts or that real estate is too volatile. Typically, we're looking at bank instruments like CDs and money market accounts. You could look at stocks and bonds, but they're just too volatile. So what is the answer? We feel that whole life with high cash value and accessibility provides tax-deferred accumulation, can provide an income tax-free stream of supplemental income at the end of their working years, and provides an income tax-free death benefit to their heirs. Okay, so there are additional benefits on top of just the regular savings account where they're earning, these days 0.05%. They have no creditor protection. They have no additional benefits as far as death benefit to their heirs, to their children, grandchildren, charity. So they also do not have the type of control over collateralizing that money. They have the ability to collateralize, but many financial institutions put a cap on that amount at about 50%. So while they have the capital there, if they want to maintain the rate of growth, which admittedly is pretty dismal these days, what you generally want to do is keep the money in the account that's earning interest and collateralize it to get the loan. But savings accounts, financial institutions, many times they don't want you to collateralize 100%. So you're really limited on how much of that money you can access without having to just take the money out and restarting that compounding curve and trying to build up that savings once again. So again, a very efficient way to do that is properly structured, high cash value life insurance, and in particular whole life. That way you can guarantee take your loan. It doesn't come out of the cash value. It still stays in there. It earns a gross rate of 4%. And while you're using it as your loan, you pay it for whatever you want to do as far as investing in an opportunity or making improvements to your business or expanding your business. Then once you pay the loan back, your money has continued to grow, continued to support the death benefit to your heirs, and continue to be protected from creditors in most states. Now, on top of that, you also have the opportunity to add a disability benefit rider for high cash value policies. This is very important because it allows them to have premium actually paid into the policy, premium dollars, paid into the policy to act as a kind of a retirement insurance for that income tax-free supplemental distribution that they're going to get when they're done working. If any of you are familiar with IUL or the UL side, they have a waiver of cost rider. Okay, that just means the cost doesn't come out, but it doesn't put dollars into the contract. Our disability benefit rider actually allows the client to guarantee that at least $15,000 annually of their paid up additions rider, which is a big part of these designs. You use a big paid up additions rider, and it's very cash rich. But up to $15,000 can go into their policy each year if they are unable to do their own occupation. Okay, so again, a very powerful way to help to ensure that what they want to happen will happen. So again, we've mentioned before that this concept is not new. JCPenney used it in 1929 to make payroll from their whole life policies. 1955, Disneyland, Walt Disney used it to start Disneyland. Ray Kroc used it to start McDonald's. And in 1980, Pampered Chef was started by Doris Christopher out of her garage. So why does this work so well? Well, what we're doing is, again, this is talking about the compounding curve. And what we're doing is we're allowing money to continue to grow and also not draining the account in the form of having a sinking fund. So you set up the savings account, and then you throw all this money into it, and then you grow it up, and then only to have to spend it down to cover the expansion or take advantage of an opportunity, and then you go back down to zero again. Well, instead, what we're doing is we're collateralizing that money. We don't take you off the compounding. You don't take yourself off the compounding curve. You take your loan, you collateralize the money, you leave it in the policy. It continues to grow guaranteed at 4% plus dividends. And then you can take advantage of that growth over time and not have to keep trying to play catch up with like you do with your sinking fund. So it's just a more efficient way of doing this, taking care of these opportunities or needs that come around. You can set the terms of repaying the loan. The flexibility is greatly expanded because these are non-recourse loans that are set up by the client, by the insured, under their terms. They can pay themselves back at a higher rate of interest if they want, if they know that their other alternative best opportunity for a loan was going to be 9% and they're only paying 5%. They could recoup some of that money, that additional 4 percentage points, and put it back into their own pocket if they want to go that route. But the point is, they don't have to get dressed up and sit in front of some 30-year-old at a bank. They just fill out a one-page form, they fax it in, and next day or two they get their money. It's as simple as that. Again, the additional benefits: predictable growth, guaranteed death benefit, and easy access. And we do not put any artificial limits on being able to access the cash value of your policy. You can get it as soon as the funds settle in the policy. No chargebacks for loans that come out immediately. We're used to that kind of high volume loan activity. And again, we're second to none when it comes to cash value growth, and even more so now with the new Horizon value. And just to show you briefly, since I went over the product last time, I'm going to pause showing my screen here for a second because I don't want you to see how messy my screen is. But just to show you the difference in cash value, since I introduced the product already, I just want to focus on that one particular area. All right, so here we go. Here is a maximum accumulation solve policy, which basically is what we're going to use when we're designing the IBC concept, and the difference that has been created from the new product that we have, the Horizon value. Now, Covenant 2 is strong, and strong early guaranteed cash values. And actually, I can show you that here when we go back and look at mutual trust guaranteed values. This dark blue bar and light blue bar, that's the Covenant 2, the light blue bar, and the dark blue bar is is Horizon value. So Covenant 2, Horizon value, and then our competitors, some of our competitors follow to the right. But what you can see is, in the first 5 years, our guaranteed cash value blew the doors off of the competition, even with their dividends included. Okay, so that's where we've always shined, but then we started to fall behind in the later years. But now with the new dividend schedule, we are right up there with them. So we have the early cash value and the later cash value to go along with it. And so we're going to take a look at year 20 cash value here for a maximum accumulation, this is just a base policy, $1 million base policy. And because you can use the paid up additions rider on the IBC, and typically you want to, but you don't always have to. So the base policy is also very important. Given face amount for a male 45 preferred non-tobacco, $100 less under the horizon value. See, we didn't build up the dividends by padding the premium, and we wanted to show that here. We just actually had the opportunity to get a better rate of return after our merger with Pan American, and we just let all that flow through to the new product. Year 20 cash value dividend, year 20 dividend is more than $10,000 higher in year 20. That's just the dividend for that year. The increase in the cash value for that 1 year is more than $12,000 higher versus the Covenant 2. Okay, the total cash surrender value is over $82,000 higher from Covenant 2 versus the Horizon value. Year 20 death benefit, when you have higher dividends, those higher dividends are buying more paid up additional insurance, which gives you a higher death benefit down the road. So as a result, you have almost $150,000 in additional death benefit to go to their heirs by year 20. So again, I just wanted to highlight this for you, that not only do we now have the higher early cash values, but even when we settle down in the cash values and kind of just grow at a more normal pace, we're going to be right there with the other high cash value policies in the later years. And again, just looking at it from a premium perspective, maximum accumulation with the PUA rider, year 20 values. So Covenant 2 versus Horizon value, more than twice the amount of dividend by year 20. The cash value increase goes up by more than $3,000 versus the Covenant 2 in year 20. Surrender value over $25,000 higher in year 20 versus Covenant 2. Death benefit almost $49,000 higher versus Covenant 2, year 20 values. So Mark, I just wanted to highlight that the infinite banking concept is a very powerful concept, and we do it better than anybody else, in my opinion. And we have just made that even better with the Horizon value now coming into play and filling the spot for the Covenant 2 to provide just really competitive and outstanding long-term cash values, as well as what we've always done really well, which is high early guaranteed cash values. So thank you for the opportunity to present this to you, and Mark, I'll take any questions if there are any.
Okay, good. So let's see, we have first question comes from Mark, and he says, can policyholder deduct interest paid on the loans?
Yeah, that's what I was alluding to. So I can't actually get into that discussion as a wholesaler on this presentation. However, we do have a specialist, Richard Weiserick, and he has access to an attorney who can get more into detail on that. It has to do with a topic that I'm not a guru at by any means. It depends on how the business is structured. I know that. So I would encourage you to reach out to Mark Ramakers or Mark. I can give them Richard's number directly and have them call however you want to handle that. But that is part of the gist of this presentation, is the tax advantages.
Okay, super. Yeah, you can certainly call here, and then if there's something that we need to do, we can call over and get your help over there. So I just put a poll out there, obviously. Kip, I don't know if you're seeing this, but I put a poll out there. If you want to get contracted with Mutual Trust Life, what we'll do is we can email you out the contract, and you can go ahead and complete that and get that over here, and can start taking advantage of offering this very competitive whole life contract to your clients. Okay, so this is a comment. Okay. All right. Okay, if anybody else has any questions, please go ahead and put those in the question box here, and we can get those addressed. And what we've done in the past is we've done like a 3-part webinar, I should say, on this concept. And so we just probably need to get one of those scheduled again here. And so you folks can all see basically the nuts and bolts of how this works. Yeah, someone comment the audio was not good. Well, I guess we'll have to. I'm not really sure.
Were you able to hear?
Oh, absolutely. Yeah.
No.
So Robin asks, is MTL a direct recognition company?
We are direct recognition, but that doesn't really tell the whole story. Basically what we do is we apply a recognition factor of 0.00, I think it's 0.007 times the dividend. So if you're taking, high early loans, max loans, over and over again, you're going to substantially impact your dividend. If you're taking, just regular loans, given the, moderate loans, given the amount of cash value, it's going to have a much smaller impact. So, for example, if you take a $10,000 loan on a policy that's getting a $1,000 dividend, we're going to multiply, and let's say you pay back half the loan over the course of the year, so that's $5,000. We're going to multiply that $5,000 that's still outstanding as a loan times 0.007, which is about 70 bucks. I'm not sure if I have my decimal point in the right place. So if you have a $1,000 dividend and 70 bucks is the recognition, you're going to subtract that 70 bucks off of the $1,000 dividend, and you'll receive the other $930. So that's just an example of how it would work. So it really depends on the size of the loan versus the size of the dividend. But the other important thing to remember is that many of these non-recognition companies will also structure their policies in a way that they have a higher loan interest rate. Ours is 5%. The one that is non-direct recognition that I know of is the loan rate's 8%. So these companies are doing the same thing in different ways. We feel that it's more appropriate to do it in an equitable way, so that non-company or policyholders that aren't taking loans are not subsidizing the ones who are taking loans. We just feel it's more fair that way.
Okay. Daniel wants to know, is premium financing possible with this policy?
Unfortunately, no. We are not doing premium financing at this time.
Okay. And let's see. Gregory asks, why use whole life versus IUL or vice versa? Inquiring minds want to know.
We believe that all products are great and have a very important part to play. And it's just that when you look at the traditional use of IBC and the creator of IBC, Nelson Nash, and his remarks regarding whole life versus IUL, with whole life, you have a guarantee on the cash value that it will be there. It's not a look back. You don't have to surrender the contract to get the money. It's just that you can do things with IUL that you can't do with whole life, and vice versa. When you put your infinite bank in practice, your private bank into use, you need to know that the money is going to be there, and that what you can count on will be there and be accessible to you in the early years. Now, in the later years, IUL is fantastic for capturing those higher rates of return on the index and potentially having higher cash values versus whole life. But what it can't do is promise those guarantees looking forward each year, year in and year out, based on a schedule that cannot be escaped. There are no escape hatches. There are no increases to cost of insurance beyond what's stated in our contract for whole life. And because of that, whole life lends itself very well to those who want to put their bank into practice and start using it right away.
Yeah, from what I've seen, the early cash values on whole life is quite impressive compared to the IULs, unless, of course, you put a special rider on the IUL, which obviously drops your commissions down, probably by at least 50%.
Right.
But yeah, it is definitely a good cash accumulation plan right off the bat. So very good question.
Yeah, very good question.
All right, folks. Well, it looks like our poll is moving pretty good there, Kip. So what we do is, just real quick, the contract I will be emailing out to you is one that once you complete the document, we keep it on record. So let's say you come along and you need a little term policy or a big term policy, or maybe it's an IUL policy for some reason or another. If there's something else or another carrier that you want to get appointed with, you don't have to complete the contracting for that. We just go ahead and add you that contract on for you. And so that's the document I will be emailing out to you. And then if you would complete those and email back to me or fax back to me to my attention, and we'll get you appointed here as quickly as possible. So, Kip, our question box is empty. I would assume that means we can wrap this up.
Awesome. Well, thank you very much. I covered a lot of information there, so apologize for the pace, but appreciate the opportunity again.
Absolutely. Thank you. And if anybody has any questions, go ahead and give us a call here at 800-255-5055 number. And you can expect, again, the recorded webinar will be emailing out to you probably by the end of the day, if not first thing tomorrow. And we'll follow up here, see if you have any questions or any cases we can help you with. So, Kip, again, thank you for your time.
Thank you very much, and happy selling, everybody.
Absolutely. Thank you all. We'll be in touch with you shortly. Have a great day.